Welcome back to Perspectives. I'm your host, Tom Picara. I say welcome back because, as I'm sure you noticed, we took a break. You can see from the look of things, a part of our break was to upgrade the overall look of the show. Now, we also spent some time working on the format. The plan is to bring you our regular shows with real estate news and opinions, but we felt that some topics required some additional space. So please watch as we bring you Perspectives Special Reports. These special reports will focus on a single topic, such as strategies for home sellers or successfully navigating the mortgage maze. We'll feature guests who are experts on the topic to provide you with information that you can really use. So since it's now officially spring, our first special report will be geared toward the home buyer. We're in production now, so watch your email inbox for the first in a series of Perspectives Special Reports. As the spring housing market has begun, it's time for a quick overview of the state of the market, and whether it's good news or bad news depends on which side of the settlement table you're sitting on. The most positive development in the market has more to do with the general economic recovery, and although it's been slow, it has been a steady positive. The housing market, on the other hand, still appears to be several quarters away from recovery. Sales of previously owned homes fell nationwide in February for the first time in 3 months, slipping 9.6% from January's level, according to the National Association of Realtors. Regionally, the median price for a home was down 3.1%, from $196,000 a year ago to $189,900. In February, there were 42,363 homes for sale in the region, and average days on the market reached 109. Additionally, 32% of area homes listed for sale in the quarter have had prices reduced at least once, with an average reduction of 10%. All this according to Trulia.com. Now, interestingly, according to Lawrence Yun, the chief economist for the National Association of Realtors, the national slump in sales should be blamed on unnecessarily tight credit and a measurable level of contract cancellations, mostly due to appraisals not supporting prices negotiated between buyers and sellers. A willingness to reduce list prices is becoming more widespread as sellers finally confront market realities, such as appraised value, for example. So home sellers, take note. Talk to me about aggressive and strategic plans that must be in place if you're looking to see an under contract sign on your lawn this spring. And overall, the housing market has not, and looks like it will not, be a major factor in the ultimate recovery of the national economy. Since the market is tilted in favor of buyers, with the help of Nancy Brogan of Redwood Mortgage in Medford, I want to give you a quick snapshot of the mortgage market. Nancy?
Shoppers will still have low mortgage rates at their disposal, just not as low as they were just a few months ago. Rates for a 30-year fixed rate rose just above 5% in February, and the forecast is that rates will not climb a great deal this year. But the rates are not the whole story. Fannie Mae and Freddie Mac are adding new fees to loans, even for those with outstanding credit. Additionally, FHA is raising the annual mortgage insurance premium by 0.25%. As a result, FHA loans will include an upfront mortgage insurance payment of 1.25% of the loan amount and an annual premium of 1.1 to 1.15%. VA loans remain unchanged at this time. So as the rules continue to change, buyers who have been on the fence should jump in the market right now before costs and regulations turn you from a new home buyer back into a tenant.
Ever feel like you're looking for someone to back you up on an opinion that you've had? Well, a special section in the Philadelphia Inquirer and Daily News, a regional study on top workplaces, revealed that Keller Williams Realty was voted by the agents who work here the best place among large national companies. Now, that wasn't just real estate companies, that was all companies. Interestingly, after a 5-year downturn in the market, it's hard to believe that anyone enjoys really working in real estate. But the 2,122 agents and employees at 23 regional Keller Williams offices feel so good about this company, they put it on top of this year's list. Keller Williams Realty was the only real estate franchise to experience positive growth in 2009, putting us in the number 2 spot among national real estate companies. Education is a cornerstone of the company's business model, And ultimately, aren't you looking for an agent with a strong skill set and a broad knowledge base about the industry? A strong emphasis on family, a national charity, KW Cares, and the independent business model that allows me to bring you things like perspectives are even more reasons. So a big thank you to the Inquirer and the Daily News for telling everyone else what I already knew. KW really is a great place to work. From Zig Ziglar, America's most consistent messenger of hope and optimism, something we all need, comes this nugget. Failure is an event, not a person. And yesterday ended last night. I hope you like what you saw today, and I hope you enjoyed the new look of Perspectives. If you did, pass it along to a friend or comment in the blog below. Weigh in on our poll question, and be sure to visit TomPicara.com to search for your dream home, learn your home's values, or just take a look at some of my terrific featured properties. Watch for the Home Buyers Special Edition of Perspectives coming soon. Until next time, keep it all in perspective.